So, can you hear me? Can you hear me? All of you? Are you hearing me? So some people are talking about the audio problem. Now we are taking up. So, okay. So now let us just take up this. Having the taxable entities as individual, HUF, firm or LLP, companies, AOP, association of persons, and body of individual. Class link. So, association of person or body of individual, local authorities, and artificial juridical person. So, I was just referring about who can be an individual, male or female, even transgender, even child, all of them will be fitted into individual. We are not talking anything about citizenship, and we are all talking in this particular subject, resident or non-resident. We are not talking anything about Indian citizen and foreign citizen. It is not about citizenship, it is all about a status for taxation. We will call them as resident or non-resident. Then HUF. What is that you consider as an HUF? HUF is requiring, it is not arising out of contract, it is arising on its own. It is all created by law. So HUF, for which you need to have constituents, should be family members of Hindu community, and Hindu community would include Buddhists, Jains, and Sikhs, and Hindu undivided family. You don't have it in operation in Kerala. Then we will just discuss, when time is permitting, more about different schools of Hindu law, Dayabhaga, Mitakshara. We will just discuss a little detailedly later. Firm or LLP. What is this firm or LLP? So we know partnership firm or limited liability partnership firm. Both are to be taken up as same as far as assessment is concerned. I hope that all of you will be knowing. Same is the way companies are classified into two as domestic company and foreign company, but generally company is one entity, and association of person or body of individual. So what do you mean by association of person and body of individual? Say for example, we require certain events to take place. The event may take place within few weeks to, which may run for 4 years, 5 years, and so on. Just like joint venture. You find it is neither a partnership nor a company. It is a sort of a temporary arrangement where you find the constituents may be individual, firm, companies, and that sort of entity informally they are doing one service. So, for example, let us assume that I'm an individual. You find a company which is a partnership firm which does all this streaming, and there is another software. Let us assume software company is also involved. So this sort of setup where you have some economic activity associated with that. So you can't call it out as a partnership nor a corporate. It should be considered as a temporary setup for a particular objective. This may run for even 5 years, 10 years, but it is not registered as a firm, registered as a company. It is a sort of an arrangement. I know some of the pundits here in Chennai, they conduct classes to people who are in foreign countries. They are more conscious about our culture. They are really thinking about India than people who are in India. So they want to just learn all this slokas or all this Vedic mathematics. So what they do is that this pundit will engage with the software company locally. So he is not knowing anything about computers and all that. He will have a setup and there is Airtel or whichever company through which they arrange. There is a company which does all this streaming facilities all over America. So you just find revenue generation is there and revenue is shared amongst many constituents. And that sort of setup is what you call it as association of persons. If you find that constituents were to be only individuals, you call it as body of individual. For example, cooperative society. Say in cooperative society, members are individuals and not corporates or not partnership nor HUO. So when you find cooperative society coming up, they are fitting into body of individuals. The next item is local authorities. Local authorities are where you have metro corporations. So where you have Chennai Corporation, Bangalore Corporation, Hyderabad Corporation, you just find Madurai Corporation. So they are also engaged in collection of money from residents and they are rendering services. So those entities are fitting into local authorities. Artificial juridical person. So for example, a university, deemed university, Madras University, you have Tirupati Devasthanam. All these will come under artificial juridical persons. So far, our Income Tax Act identified only 7 days a week, 7 types of assessees. That's it. So remember that you have individual, you have HUF, firm or LLP, companies, AOP, BOI, local authority, and artificial juridical person. So please just understand that. So why we have just taken up this particular thing is that the next one that I would like to take up is the rates of taxation. So I'm not going into which schedule is talking what. Absolutely, those things are general knowledge. That is not for the purpose of in a crash course program. I want to take it up. So normally in GST they will take into consideration this is constitutional sanction. And they talk about central, state, and all that. I'm not going to talk about all this. So there is a different sort of stuff. So these are the 7 types of assessees. And then we have heads of income. What is that? Heads of income. We have 5 main numbers. So how many heads Ravana had? 10 no. So Income Tax Act is having half of Ravana, 5 heads only. Those heads are salaries, income from house property, profits and gains from business or profession, capital gains, and lastly, income from other sources. Just to touch, I thought we will take up this issue. Then we have something called as residential status. Residential status will decide the incidence of taxation. So we have generally a classification as you call assessees into 2 categories: resident, non-resident. Resident and non-resident. Subclassification as resident and ordinarily resident, resident and not ordinarily resident. We'll take it up a little later. So the significance of that we will learn it later. So right now it is resident and non-resident. So in the case of resident or non-resident for that matter, we will identify only in the case of resident, only in the case of individuals. I will put it this way. For individuals, others. For individuals, the status of individuals will be decided based on stay in India. What is that? If an individual is staying in India in that previous year for n number of days, we are not going into the technical details. 182 days, 365, 730, all that is a big discussion. I am just not going into the micro aspects of those issues. I'm just touching the basics. So, based on stay in India. For others, based on management and control. Management and control. So, if the stay is according to what they given in Income Tax Act, Section 6 and all that, you say if stay is satisfied with section. I'm not even telling what is the section number. Stay satisfied with section requirements, with requirements of section. Of section. Or I will put it like this way. Satisfied with the requirement of section? Yes. Yes, will be resident. Management and control. Resident. Not in India. Automatically non-resident. So what is management and control? Management and control should be understood at the very initial stage. They are saying like heart and brain of an individual. As how do you identify in case of business? And that's the way they have got to take up. It was very generic at the early stage. Then people are just doing operations this way. You need to know the background. If management and control is wholly in India, resident. Wholly outside India, non-resident. If it is partly in India and partly outside India, then also it was considered to be resident. Is that if it is partly in India and partly outside India, they were considering it as non-resident because registration of the company had taken place outside India, partly in India and partly outside India. They gave the doubt for such foreign companies to non-resident. So later on, people tried lots of manipulation. What sort of manipulation? So if there were to be a foreign company, you require 4 board meetings they got to conduct. So they were conducting in such a fashion that they made it appear that majority of the board meeting they have kept outside India from that, but primarily the principal place of business was effective management was in India. So this is what we call it as poem. What is that? They have introduced the term as principle of effective management. The place of effective management. Sorry, place of effective management. So they have brought up a new scheme of rules, and where they said if principal place of or place of effective management, not principal, place of effective management are identified to be in India, even a foreign company will be taken up as resident in India. So therefore, they have closed all the doors to manipulate, and now it is very clear that if principal or sorry place of effective business were to be in India, then it is to be taken up as resident. If it is not so, then it will be taken up as non-resident. I'm not going into those aspects. Definitely, we will take up those issues, but not at the very initial stage. Now, next stage is incidence of income. Incidence of income. What is this incidence of income? So understand that they were classifying the income into two. One is Indian income, the other one is non-Indian income or foreign income. What is that? Indian income and foreign income. Here again, I am not taking into account section 9 and go elaborately. That is for a regular class we can do. Let us just know about what is the intent of the Income Tax Act. So for this, I normally used to convey a story. Story will tell major portion. Small adjustment in your learning process, you have to take it up by going to section 9. Section 9 will have greater amount of impact for tedious topic. So in fact, if I just scheduled the class, first class basic introduction, second class capital gains, third one tedious, TCS and general deduction, that is chapter 60 deduction I made. So please understand, TDS and TCS when we will take up section 9. So people were just telling that should have been taken up a little later. Let me tell you, having taken up the class in the earlier years, I have found that this schedule, what we have just made, is more appropriate and more logical and sequential. What is an Indian income and what is a foreign income? I would just convey through a short story. Very, very simple story, anybody can easily understand. So this is our house. In the top floor, we have a small classroom setup. Okay. So the classroom setup, very rarely we use. It's a very small classroom. And in the evening or in the night or in the early morning, we spend our time there outside. We have good space there. There, our neighbor, now here, this place was bought by another gentleman and he had constructed. Previously, we had this neighbor owned this property and he was living in Bangalore. And the place was not given for rent. And there were 3 mango trees were there. The mango trees were planted in such a fashion that roots are there in the neighbor's place, but fruits are there in our place. Please understand, there were 3 mango trees. One of them, root was there in there, all the 3 having roots, but one of those 3, root was there in neighbor's place, but fruits were in our place. So now the question is that whether these mangoes are to be taken for our purposes or should we pluck and give it to the owner. Owner is not there in Chennai, he is there only in Bangalore. There was no tenant. What would I do? So all these school going children, for them, when these mangoes are just real attraction, what for? Stone building. So as far as the school children were concerned, they are not really worried about the cost of the stone because on the roadside it is available. But for us, it will hit our window and window will break. So what shall we do? Prudent concept was there. What is a prudent concept? Mangoes were all taken to our side and how much mango we can take? We have distributed to all neighbors, other neighbors, and distributed to relatives also. Some more mangoes were also taken up. Our neighbors said it's enough, we have just got good quantity. Relatives also said we don't want. That much bountiful mango was there. Before taking, we called the owner and said this is the problem. Either you give it for lease for somebody or allow us to use and we will also say we will pay the money. The owner said the leaves are falling at your place and you are only cleaning. So therefore it is your mango only. We don't want mango at all. So now please understand, same concept only in the Income Tax Act I just conveyed. So what is that? You find this is India. You find trees there, mangoes. You find fruit in India, fruits also in India. No problem at all. Then another tree. Now please be careful. The story what I told and the story what I am going to convey here will be different. Now root is in India. Root is in India. Fruit is outside. Now for a dormant neighbor who is there only in Bangalore, he is not really worried about for few kilograms of mangoes. He said, you please take. But Indian government is not like that. So when roots are there in India and fruits had fallen outside India, so Indian income tax is telling, since root is in India, fruit had fallen outside India, it should be taken up as Indian income only. So the fruits fallen outside India, is Indian fruit only. Okay. So please have this logic. You can understand section 9 very easily. The next, our neighbor's tree, where the tree is so big, their fruits have fallen into India. Okay. It is like our scenario. Our neighbor's tree fruits have fallen. Whose fruit it is as per Income Tax Act? Our fruit only. So our fruits fallen in the next, that is neighbor's place. Since root is there, it is our fruit. We don't follow that principle. Then, so when you find root in neighbor's place, but fruit had fallen in our place, we don't consider that as our neighbor's income. We will take it up as our income. So very selfish. And I will tell you the logic behind being selfish. Last one, root and fruit for the fourth tree, where you find root and the fruit both in neighbor's place. Whose income it is? Their income only. Please understand, this is what you find in Income Tax Act also. How they have mentioned is a very simple understanding that you got to have. Now, you have assessees, resident assessees, non-resident assessees. In the case of resident assessees, you have two subclassifications. What are the two subclassifications that you have? Indian income and foreign income. Non-resident, Indian income and foreign income. Okay. All of you, are you understanding? Assessees are classified into two, resident and non-resident. And in each of those assessees, you have Indian income and foreign income. And now let us just understand Indian income for a resident assessee, it is taxable in India. Correct? This is like root and fruit or in our place. So our fruit only. This is root is in India, but fruit is in outside India. So we should consider that fruit as ours. So it is taxable. You find root is there in foreign country, but fruit had fallen in India. It is also to be taken for taxation. Where the root and the fruit entirely wholly outside India. This is the one you have to take it as non-taxable. So first and foremost thing is that how you take up a case for TDS purposes. So for applying tax deducted at source provision, first and foremost thing that you have to think is whether it is an Indian income, whether it is falling under section 9. If it is falling under section 9, then you take up TDS provision. If you find that item is not a Indian income, if it is an Indian income, take up TDS. If it is a foreign income, you cannot take it as take up for TDS. Let me repeat. I might have just conveyed it out of slip of tongue. Let me tell you, if it is Indian income, TDS provision will be applicable. If it is to be considered as not an Indian income, TDS provision will not be applicable. Now I will give you a classic case you can easily understand as how your basics will enlighten you for other topics forever. You don't have to just refer to many sections, remember many provisions to say as whether it is taxable or not, whether TDS provision will be applicable or not. Closely follow. We find India is doing very good in tourism. A lot of people, foreigners come for tour in India, and Tamil Nadu is considered to be number one in India in generating tourism income for variety of reasons. I'm not talking very great about one, does not mean I am talking bad of other states. So, how am I telling this is that we have just done small NGO audits where they are connected with this tourism only. They gave the statistics, official statistics given by Government of India. See, Tamil Nadu is a place where you have a lot of temples and all foreigners are attracted for the temples and the architectural things that in ancient times India used. So they were really astonished as how in a place where 200, 300 square kilometers, there was no mountain at all. There is no rock surface that you have, but they have built a lot of temples there, our native district, Tanjavur district. So based on that, I've just gone through some brochure and talking about that. So please just understand that in this root fruit example, whatever I just given, and tourism business, which I was just referring about, you find hotels are to be booked by foreigners. How come foreigners should know a particular hotel is very good for stay? So therefore, the hotel person in India will have agent in, say, London, USA, or in any foreign countries, where there will be a tourist operator there in that particular country, or the place where these foreigners will be staying in their native location when they go to a particular place. Say, for example, if I'm just going from Chennai to Bangalore, I stay in Bangalore where I am in contact with a tourist operator. The tourist operator might tell something about great about, say, France. Likewise, you just find a prospective customer is being identified in, say, London about a tour in India, for which commission is to be paid by Indian hotel, Indian, what I would say, there is an Indian hotel has got to pay commission. Whether this payment to be made to a foreign tourist operator or a hotel where they recommended our hotel, when we pay this commission, whether TDS will be applicable or not. If you ask a question, they really fall into section 9 and then to 195 and so on. What is that? Firstly, to take up a matter as whether it is covered under TDS provision, first and foremost thing you have got to ask a question whether it is an Indian income in the hands of the recipient. So the person who had effected this service was not in India, he was in America or London as the case may be. Definitely, the amount of expenditure that we pay will become an income in the hands of the recipient. So now the question is that whether it is an income arose in India or deemed to arise in India or not. So please just understand the way in which they put across the adjustment in the main examination is that they would say this hotel had paid commission for arranging tourists in India, for which no TDS was paid. They will make it as if it is a complaint. So what an average mind would just think, oh, TDS not provided. Huh? So when TDS is not provided, then non-resident, so it is not 30% disallowance and all that, 100% disallowance. So our mind will go out and say that it will be disallowed and will add back. So you have to sit and think as whether it is an Indian income for that gentleman. If it is yes, TDS provision will be applicable. So if you look closely into the case, it is not an Indian income at all. No tax shall be deducted. What they have not deducted as tax is correct, and there is no addition that they have got to make. So you have got to be very careful. So therefore, these basics, when they are captured properly, then later part of your discussion is going to be very easy. You can judge properly. Imagine the person who had just not had these basics proper, then he will be succumbing to such complaint sort of adjustment that given the problem, they would just put it like this way. No TDS or no tax was deducted when remittance was made to this non-resident alone. So you immediately jump into conclusion that 100% disallowance and they got to we may add and got into wrong footing. So if your understanding is correct, then you will definitely be writing right. So apart from that, then one more important thing that you have to understand is that, so continuing with this discussion, so in how many places this income will be taken for taxation? This will be taken for taxation only place. Which place? It will be taken for taxation only in India. There is no other claimant for this tax. There is no person who will be claiming on the income. Therefore, it will be taken for taxation only in one place. Now, understand Indian or resident, not Indian, resident who is satisfying our residential status, he is generating a foreign income. So your act is saying that because of the status of resident assessee, global income, wherever he is generating, it will be taken for taxation. Now, ask him the question whether this income will be claimed by only one person or by two persons. So, answer to that question is that it will be taken by two persons. That is, two entities, two countries will be taken for taxation. Which are the countries will be claiming for taxation? Indian income, Indian government will be taking up this for tax purposes. He will be saying that it is even though it is foreign income, because of his residential status, we will try to bring that income for taxation. So therefore, Indian government will be taking up. Then the place where the income is generating, the government of that particular country where the income is arising, they would tell the same story. What is that? Root is here. So therefore, income should be taken for taxation only in that location. So therefore, there will be two governments which will be claiming for taxation. Okay, understand that. Similarly, the non-resident who is having Indian income. So the moment when I say he is a non-resident, the income arising in India will be taken for taxation definitely by Indian government because income arose in India. But at the same time, the country to which he is belonging, that government will also be taking up similar stand as what we have taken up in this particular case, and they will also be claiming that particular income for tax purposes. So here too you will be finding two entities, I mean two governments will be taking up for taxation. And as far as the last item combination is concerned, you will be finding only one entity will be or one government will be claiming, and tax is to be paid only to the foreign government. So please just understand there is no problem as far as first and the last. We do have this problem where one income is taken for taxation in two different places. So we are expected to allow that income to be taxed in only one location. So in two different places, it will be taken for taxation. So what is it we should do? So here is a place where you have DDAA coming up into operation. So please understand from the basics when we are discussing, just even in 45th minute. So first half an hour we had a general discussion. Now within 15-20 minutes we are getting into the main topic of our CA final. What is that main topic? Double taxation relief or double taxation avoidance agreement, DDAA. So please just understand that a topic within 45th minute we are in a position to hit. But we will not be taking up complete for discussion. Just I am telling us how you people need to be very careful on the basics. So this DDWA we will be taken up maybe in the next class or so, or when we are talking something about transfer pricing and non-resident taxation. So that point of time we will take up this matter for discussion. The point which I want to tell you is that how basics are so important for furtherance and an advanced level in CFNL. Okay. So here, when time is permitting, towards the end, we will take up for discussion. So our aim is not to take up DDWA today. So just touch the very important ones. Basics we are taking up for discussion. I wanted to discuss more about business trust, and before that, I want to tell you as how taxation needs to be taken up, or how tax computation will be taken up. So how the tax structure is there. So we need to discuss something about 111A, 112, 112A. These are all three important sections for tax computation on capital gains. That is, in the next class we will be discussing about capital gains, and in today's class itself I will be discussing briefly about these three sections. So the moment I am using this section, so please just don't get annoyed or something like that. Please just understand it is very, very easy to remember. 111, all are one. Okay, 111A. 111A. Then the next number is 112. Then 112A. These are the three important sections which are communicating something about what tax rate you are going to use for what type of capital gains. This 112A was introduced only in the last assessment year 1920. And please always understand the latest amendment, and a little older one will normally be taken for testing, because in an examination they can't be taking all amendments. If there were to be any leftovers, it will be taken up in the following examination. So these items will be taken up for discussion, and today it will be of general discussion, and which will enable you to understand Income Tax Act much better than what you could straight away talk something about section 9, section 6, section 47, 49 and all that. So all that section numbers and all that we will just learn out of practice. Now let us just know something about for tax liability. So when you take up tax in India, especially in Income Tax Act, we have two types of taxation only. One is slab based, the other one is flat based. There are only two types of tax rates you have. There is tax rate, there is tax computation with the help of tax rates. There are two types of taxation only you have. What are the two types? Slab based, up to 2,50,000, no tax need to be paid. Between 2,50,000 and 5 lakhs, pay at the rate of 5%. Between 5 lakhs to 10 lakhs, pay at the rate of 20%. Above 10 lakhs, 30%. Then you have categories of senior citizen, super senior citizen, all that categories that you have. Those will come under slab system. Progressive rate of taxation is what we call it. So person having higher amount of income should be charged at a higher rate for an income above a particular limit. Progressive rate of taxation. People say, economics professor would be saying that progressive rate of taxation is always good. It will avoid distortion in the economy and all that. All that stuff are correct. Then what is the other one? Flat rate. What is this flat rate? 30%, 25%, 42%. So our finance minister making a lot of changes. See, when I was doing my articles, see some bank audit, income leakage audit, we will go. Manual computation of interest. There will be a lot of borrowers who have paid a lot of money and drawn a lot of money. The ledger size will become big and big. A lot of debits and a lot of credits. We hate that sort of borrowers, because a lot of running computation I got to make. Daily balance I got to check. We will be liking such borrowers who will hardly transact with the bank. Once or twice in the 3 months period, we will be very happy. Why? because our job is becoming less, but those borrowers are really causing a lot of worry to banker. Such borrowers, where banker is comfortable with lot of credits, lot of debits there, lot of movements. Those files are, those cases or those ledgers are causing a lot of worries for article students because I could calculate. Likewise, our finance minister making amendment by amendment, bringing new changes based on the state of economy. So causing a lot of problem to CS students as well as to faculties. So I want to tell whether I have to tell 22%, 15%, or 25%, 30%. See, it becomes little tight. Of course, we can't blame finance minister for that purpose. He or she, for that matter, is doing only a measure for developing a lot of income, incentive, and so on. Their objective is entirely different. They are not doing for the purpose of examination, whereas we are doing it for examination purposes, so therefore it is a burden. So as how articles person will be very happy with such borrowers not at all paying, because one shot, one entry, you calculate lot of entries in one day, 10 entries, 20 entries will be there. We hate that sort of borrowers. Likewise, you find a lot of rates underwent change. I'm not going to talk about all the rates there. The common rate that we are going to take up, that we prevail for a very long time, we will take that. They just fall 115, a lot of alphabetical numbers that they've introduced. We'll discuss about that later. General talk is what I am making today. Slam, individuals, you can put it like you say, to whom this flat rate will be applicable. This will normally be applicable, flat rate will be applicable to firms and companies. And rest of the members will come under slab. Okay. In fact, we will see the rates which I have just taken up in intermediate class. So that particular file I will show you to you. That becomes very easy for you to understand. Okay. So before we could just make, after this tax, there is something called as surcharge we have. What is it? Surcharge we have. So what do you mean by surcharge? Taxing the higher income earning, there is higher income assessees. So surcharge is not applicable for those who are earning less. So here also we do have slab basis, and based on their income level, surcharge rate will vary. But only one thing is that surcharge is computed as a percentage on tax. Okay, please be careful. So surcharge is computed as a percentage on tax, but to know what rate you have got to use, you have got to take up income. So for the purpose of selecting the rate, you have got to use income. For the purpose of computing surcharge amount, that percentage whatever you have selected should be applied on tax amount. Applied on tax amount. Please have that in your mind. Then you will have something called as cess. Higher education cess. So this cess at the rate of 4% is to be applied on tax plus surcharge. Tax plus surcharge. This is general statement I am making because many times we compute this tax, surcharge and cess by default. What is the difference? Say when you say that taxation is very important, very interesting paper or subject in an interview. So the other side of the interview, the person may be good in taxation. Morning you would have gone for some CPE meeting where the speaker would have conveyed the difference between tax and surcharge, difference between surcharge and cess. So a chartered accountant who is coming for an interview, the CFO or the general manager would have learned only that morning, but he would like to know as whether the new incumbent is knowing about the subject matter. So what is the difference between tax and surcharge? The moment you say that tax you like the most, he will be putting a question this way: what is the difference between tax and surcharge? So I'd like you people to convey before I could just say something on this. Come on, I will just give you 2 minutes time. What is the difference between tax and surcharge? Don't tell the same answer what I convey. Tax is computed on income, whereas surcharge is computed on tax. Not that. Something better. What is the difference between the two? More to do with general knowledge than to do with computational aspect. Come on. Please answer. General extortion. It's not extortion at all. Say that may be a critical comment. So general matter. Surcharge is a specific. Something better I want. But anyway, it's a good attempt. Others? Come on. Surcharge is for a specific purpose. Narayanan Tyagarajan, not correct. Tax is over income surcharge. This I told you not to quote as the reason at all. Now I will tell you. So time is just provided. So please just understand. It's more of general knowledge. Tax will be shared with state government. Income tax is collected by central government and it will be shared with state government, and the tax can be used for any purpose. What do you mean any purpose? As you all know that tax paid for which there is no return specific for that. So there is no quid pro quo. If tax is collected from me, I can't expect that the road in my street, there is the road where I reside, the place where we have our coaching class. I don't expect an excellent road and all that. I don't expect something returned from the government. No, not like that. So money collected here can be used for defense purposes. Money used here will be used for medical purposes. Money given here may be used for creating airport, new airport. So as far as collection and usages are concerned, they cannot be connected at all. So why I made this reference is that when we talk something about cess, you will understand that. The next, as far as the surcharge is concerned, not shared with state government, not shared with state government. So Chidambaram, when he was a finance minister, he used to increase the surcharge just like that. So instead of increasing the corporate tax rate from 30% to 33%, what he did is that he had introduced surcharge at the rate of 10%. That means effectively it is 33%. 10% on 30 is 3%. But he could have as well taken up 33% on taxation, but he never did that. So he kept the tax at 30 and he introduced surcharge at the rate of 10% and ensured that this 3% what is getting. What is the 3%? 10% on 33 is going straight away to central government and no part of that is shared with the state government. So it is a sort of a deceit, or I would just say a deceiving act of the central government by increasing the surcharge and not sharing with the state government. And once again, it is like this way. What is that saying? What do you mean by saying? Can be used for any purpose. Can be used for any purpose. Cess. Coming back to this cess will not be shared with the state government. Please understand, when you say that it is Education says it should be used only for education alone. Shall be used only for education. Higher education means only for higher education. So that is the reason as why this discussion we have just made. This is not that will not be asked in any CFNL examination. Just a general knowledge. That's it. Okay. So have that in your mind. And now I would like to show you another journal, Windows journal, where for intermediate class I just brought this rates noted there. I would like you people to make note. In fact, I would say that rate that we have brought, that is a slab 1, which will be very easy. In one shot, you can understand as how the rates can be taken up. So please just understand that if you go through institute study material, you will be finding for individual separate table, for other assessee separate table. This way they will increase the number of pages. So where I am going to introduce in one sheet itself, the entire tax rate you can put it. So if you start noting down, it is going to take more time. So you are all having smartphone. Okay, you have screen before you. What is that you do? You take a clip and later on, visually put it in your notebook. So I will show you that screen. I will show that screen. So this is the screen, or this is the sheet that I prepared for intermediate class before this lockdown. Okay, so where individuals are classified into two: super senior within brackets resident attain the age of 80 and above during the current period. Then senior citizens residents attain the age of 60 and above up to 79. Others other than senior, super senior and senior residents. There is all these ought to be understood very clearly. They are all super senior and senior residents. Okay. So please just understand as how we have taken up. The slab is like this way. Are you seeing? Slab, others, senior resident individual, super senior resident individual. So here we have on the left hand side the tax rates 0, 5, 20 and 30. I have given the slab 0 to 2,50,000, 0 to 3 lakhs, 0 to 5 lakhs, 0%. 5%, please understand, others would mean those assessees other than senior resident assessee, super senior resident assessee, all others will come under others category. Okay. So now, so this is the, in one table, I am just finishing it off. Are you taking? Take, that is put a click. And here I just put other than cooperative society. For cooperative society also you have slab. Okay. Now in the case of cooperative, we have three rates: 10, 20, 30, 0 to 10,000, 10,001 to 20,000, 20,001 and above. You have these three rates. Then flat rate. So flat rate 25%, 30% and 40%. For company if the turnover is less than or equal to 400 crores in the previous year 17-18. Rest of the companies other than foreign company and firm and local authority. So therefore, please just understand only companies, firm and local authorities will come under flat rate. Rest of them will come under slab rate. Who are those rest? Individual, HUF, AOP, BOI, and artificial juridical person. And in AOP and BOI, you have this cooperative society. So therefore, 4 out of 7 will come under slab rate and 3 out of 7 will come under flat rate. So therefore, in 2 different tables, you can finish the entire rates. Okay. All of you, are you clicking? Okay. Now, after that, we will take up surcharge. I'm not understanding. Some of our friends are telling, please. Sir, could you minimize your chart window? Oh, okay. So this comment section is hiding their thing. Okay. Minimize your chart window. Is it okay now? Is it full screen now? Is it okay? Not okay. Okay. So by minimizing, could you minimize chat window? Is this applicable only for this particular screen, or is this having impact in other screen also? So I can't just make those arrangements. So what I do is that, don't worry, I will take a photo of that and finish it up. Okay. I'm seeing. So anyway, I will just send. Don't worry about that. Say our. I'm not that very familiar with how to mute or unmute there. So I would just put it this way. I will slowly roll up. So if it is blocking in this place, I will just slowly move up. You can just see that. So rate based on total income. This is what I told you, that surcharge rate will be selected based on total income, whereas having chosen the rate, it will be applied on the tax liability. So we don't have this up to a stage for the foreign company. You just don't have this rate at all. The lowest rate comes against 1 moment. One moment. We will resolve it. We'll just take 1 minute break on that. நல்லா போயிட்டு இருக்குது. ஒரே சின்ன இது பண்ணணும். ஒருத்தருடைய சாட் மாத்திரம் என்னுடைய இதுல ஸ்கிரீன்ல கொஞ்சம் வருது. அந்த சாட்டை வந்து அவரால் ரிமூவ் பண்ணுறது இல்லை. எப்படி நான் ரிமூவ் பண்றது? அவர் போட்டிருக்காருல்ல, அதை மாத்திரம் ரிமூவ் பண்ணணும். தெரியல. நான் இப்போ ஹைட் பண்ணிட்டேன். இப்போ ஹைட் பண்ணிட்டேன். ஹைட் பண்ணிட்டேன். சரி சரி சரி, ஓகே, ரைட், ஓகே. Now it is hidden. Now it is hidden. Even now, இப்போ நான் ஹைட் பண்ணிட்டேன். சரி, ஓகே. Okay, thank you. So alongside of the class, my ignorance on this subject matter will also be coming to light. But anyway, I am happy to learn from whosoever for that matter and any point of time. So we'll just take up that. So as far as the surcharge is concerned, you can take a click of this up to 12% and some more we have. Okay. Is it okay? Now, after this, cess, which is stated as to be computed at the rate of 4% on tax and surcharge, there is a concept that we have called as rebate. What is it? Rebate. Rebate under section 87A. What do you mean by rebate? Rebate is nothing but reduction in tax liability, which is applicable only to individuals who are residents, whose total income is less than or equal to 5 lakhs. And how much is the amount of rebate that they are eligible for, which is 12,500 or actual tax liability, whichever is lower. That means if a person were to have 5 lakhs of rupees as total income, 2,50,000 is basic exemption limit. The other 2,50,000 is available for tax at the rate of 5%. By applying 5% on 2,50,000, it comes to 12,500. The entire 12,500 is allowed as rebate. That means person who is stepping into the next slab beyond 5 lakhs, for him the rebate is not applicable at all. So therefore, in an indirect form, the government had given relief to people who have just reported income to the extent of 5 lakhs. And beyond 5 lakhs, the rebate is not applicable. That means whatever tax that they got to pay plus that 12,500 they got to pay. That means if a person is reporting 6 lakhs, he is not eligible for rebate. For the first slab of 2,50,000 to 5 lakhs, 12,500, and beyond 5 lakhs, it was only 1 lakh. On 1 lakh, 20%. On 1 lakh, 20% is 20,000. 20,000 plus 12,500, 32,500. So please just understand, there are two persons, A and B. A earning an income of exactly 5 lakhs, B earning an income of 6 lakhs. A will pay no taxation, B will be paying 32,500 rupees taxation. I have not taken into consideration cess. So please just understand that there is going to be a big gap. Of course, government had decided that up to 5 lakhs, no tax at all. So this is the way it was just developed for assessment year 2021. So please be careful. And now we will stop at this stage about flat rate, slab rate, surcharge, cess and all that. Now I would like to take up on to other tax rates. That is tax on capital gains. Before I could just do that, we had one arrangement, no? So within the first 1 hour, I will give 5 minutes gap, and I would like you people to raise your points. Not all the points will be in a position to address, You may tell that, sir, this aspect covered, this aspect not covered, I have understood this. See, that aspect I don't want, but definitely we will have a private chat. So I want you people to tell or ask some principal questions, not computational ones. Random questions, please just don't ask. What do you mean by random questions? The scenario not at all there. But these people will create, and just for the sake of asking question, they will ask. So it is something like uncle is younger than the nephew. So such imaginary scenario may be possible somewhere. I have had some relatives like that, but such imaginary questions we just do not ask because our time is very limited. I am just trying to make things very simple and not putting sections unless it is very much required. And I will announce 5 minutes gap now. I will be very much seated. You can post your questions there, and definitely we will address all those. If not in the class itself, beyond the class, I will be just available in the chat. I will be just posting. So definitely you can ask any question. Okay. So now the time will take from now on for 5 minutes. Now it is 5:27. So we just go by 5:32. We will start. Okay. One more minute you have, so you can just raise your points there. Now, let me just address this point. Say there were 4 or 5 queries there. So the problem is learning something later, that is in the later part of the act, and not having basic understanding at a lower level is causing confusion. So the point is conveyed this way. 87A is applicable only to resident individual, not applicable to non-residents, applicable only to individuals. Whose total income is rupees 5 lakhs. So please just understand, there is no gross total income at all. When you say total income, that should be understood as after deducting towards chapter 60. So the doubt asked by Muralidharan, so please just understand that 87A, when we talk about rebate is talked when we are computing tax. Tax is computed on total income. So you go that way. There is no question of gross total income coming there at all. It is on total income only. So, okay. So when you talk about rebate is something to do with tax liability. Tax liability is computed based on total income. Therefore, it is all about total income. Total income we mean, see, it is something like this way: gross total income minus chapter 60 deduction. They should have called this as net total income, but they remove that net. They call it as total income. Total income is always after general deduction, chapter 60. Understood? So that is a point raised by Muralidharan we could address. Then Sivagami Kannan, she raised a point about TDS. See, understand that I have not addressed it fully. I am just communicated to you as whether TDS provision will be applicable or not. You have to say yes only when the income in the hands of the foreign person is taken as Indian income. If that assessee, if that particular gentleman is proving that it is not an Indian income, and when he is a non-resident and not an Indian income, naturally the item will be taken up as not taxable at all. When the income is not within that jurisdiction, so quite naturally it will not be taken for taxation at all. So jurisdiction is a very important matter. See, this is conveyed very clearly in Ramayana. In Ramayana, when Vali was killed by Rama. So I will briefly talk about Ramayana. I will be very much happy because otherwise I will forget it. I heard 3-4 days back in the evening between 6 to 7 by Anantarama Dikshadhar. So no other job between 6 to 7, we are just only listening. So Sugriva and his minister Anjaneya will tell their problems with Lord Rama. Lord Rama also was deprived of his wife Sugriva was also having. So Sugriva was just thinking, okay, Lord Rama is having my problem, so we can discuss in common. Say he did not know about the Parakrama of Lord Rama. So every time when he is going for a fight, he will get severe beating, and every time he will be coming back with a defeat. So, so in fact, that point of time, Sugriva had a doubt as whether Rama can really help him out, and that is the time at which he showed his power. Then he kept quiet because doubt will always be there, no, the stranger. But Hanuman did not have that doubt. So I will come back to that jurisdiction very quickly. So next time, when Lord Rama told that Sugriva that he can go and fight this time, and before going, he said, please just get this garland given by Lakshmana. Whatever garland given by Lakshmana, the person will have Jayam. And he was fighting, I mean, Sugriva was fighting, defending very well. So the previous day of that, Tara, the wife of Vali, was just telling that your younger brother is having greater power now. There are two people who have just come from Ayodhya. He was just talking about Tara was talking about greatness of Lord Rama. So, in fact, she suggested better you make Sugriva as Yuvaraja, and we can avoid fighting. So then Vali told that with this much of greater attributes of Lord Rama will not pose any problem to me. I will continue to fight with Sugriva. I don't want to share my Rajyam with Sugriva. Fight went and Vali was killed. Killed in the sense his arrow had pierced him and he was about to die. And that is the point of time he asked him the question. Vali asked Rama, what question? In a crash course, Ramayana is also there. He asked this way, you have not hit me directly, you have hidden and hit me. Is it appropriate? Did I do any bad for you? This is my jurisdiction. How come I have not done any harm to you? So please justify. Even if I am killed, no problem, but people will accuse you. Now some illiterates will be accusing even today. But he was just talking about intellectuals will accuse him for killing him by hiding. Then that is the point of time Lord Rama there is told this way that the place where Vali was killed is within the jurisdiction of Ayodhya. Please just understand, jurisdictional problem he was just communicating. He was just telling it is not your jurisdiction. Rama told that it is my jurisdiction only. And he was just telling that Vali is an animal. We have in the rules book, animals can be killed by hiding. So therefore, the killing is correct. And he justified with one more matter, which I don't want to take it up right now. So the matter which I want to tell you is that if the income is considered to be a foreign income, then TDS provision will not be applicable at all. If that particular income is to be taken up as Indian income, then TDS provision will be coming. That is the point I want to tell. Finally, I have not made any conclusion. Conclusion we will be making it up only on TDS. So the point at that point of time, what I wanted to tell you is that TDS provision, as whether it is applicable or not, for which what is very important is the classification of income as whether it is Indian or foreign. That is the point I want to tell you. That's it. Then Surcharge, how you got to memorize? Definitely, I will find one way. And since our classroom is good enough, I would be finding some of our friends would be having some ways to memorize. I will try, you also try. Okay. Then Kiran Bindu asked a question. Sir, this is causing confusion. Which income for which 87A rebate is there and for which item 87A rebate is not there? For all items of income, 87A rebate is there except in one case. 87A rebate is applicable to all items of income, except in one case. That particular case where you have the applicability of section 112A. That is a point I want to take up. In fact, what is the title I just given to you? Tax on capital gains. So, in order to learn the next stage, firstly, we should know about the rates of taxation, surcharge rate, rebate, and the tax on capital gains. If these items are known, then your mind will immediately correlate all these matters when we take up tomorrow the capital gains topic. We will be swift in computing. We will know what items will come and what items will not come. Now I will tell you in general now, because for that doubt I got to clarify. So what is this 112A? Are you clear? Are the doubts clarified? So you people have just put that. Are the doubts clear? Now let us just take up this particular issue, tax on capital gains. What is this tax on capital gains? So we have 102 short-term capital gain, long-term capital gains. In short-term, you have short-term capital gain arising on account of transfer of equity shares, units of equity-oriented funds, units of business trust. What are the three items that you have? Equity shares, short-term capital gain arising out of equity shares, short-term capital gain on transfer of units of equity-oriented fund, short-term capital gains arising out of transfer of units of business trust. Okay, these three items for which you have a concessional rate of 15%. For others, normal rate. For others, normal rate. In the case of long term, similarly, equity shares, units of equity oriented fund, units of business trust, the rate is going to be 10%. There, 1 lakh exemption that they have provided. So very, say, ministers, they have a lot of love and affection when they bring about a lot of statements, but when they made it, they have made it a little mess, I would say. I'm not blaming Arun Jaitley, but some amount of deliberation they could have just done. But let us just understand act as an act. Let us not go for critical comments on Jaitley. I have great respect for him. So this 1 lakh is sort of an exemption that they have provided additionally to that 2,50,000. See, when a person is just having 2,50,000 rupees as basic exemption, you may 1 lakh is additionally provided. I'll tell you how. A region where we had long-term capital gain arising on account of sale of equity shares and arising out of sale of units of equity-oriented fund and business trust, they're all fully exempt. They're all fully exempt. That means what general public will be understanding is that, oh, people who have not sweat and put the money in shares and equity oriented fund units and business trust, 3 years or so they have got to keep the money. If that is flourishing and when the money is, when capital gain is resulting and there is no tax at all. It is completely exempt. So this resulted in people keeping lot of money. People keeping lot of money in share market for a longer period of time. So please just understand that when money is kept a little longer, the money is used for productive purposes. See, there will be ulterior motives when you have one package given. The general public, opposition, there is political parties. They say that this government is pro rich people. You just find the dividends are not taken for taxation at all. 1034 is just provided completely no tax. Ambani is taking a lot of dividend to his home without paying tax. And when he is selling shares, he is not at all tax. There is not at all paying tax. See, then general public is asking a target nearby. You will say yes, 1034 goes there, 1038 there. So immediately they will have a wrong impression. Who really got benefited? Ambani or these shareholders got benefited. Who got bad name because of that? So Modi government got the bad because crowd lacks logic. So therefore, Jaitley thought, okay, we will do something in between, not completely allowing for without paying taxation, and therefore they have brought this way up to 10 lakhs, beyond 10 lakhs, 10% rate. So they have just brought. So therefore people will not complain more. So sometimes more intelligent person may not be thinking that, what should I say, cleverly. So that way Arun Jaitley is not that clever when compared to Chidambaram. Chidambaram is considered to be a clever person. So in that sense only. The reason is that I told you surcharge. So he will take as a central government with full right in front of everybody. He will take, and no share with state government. So understand in this particular case, what is happening is that up to 1 lakh of rupees, if a person is making long-term capital gain, of course you have condition that security transaction tax that you have to pay and all that, or at the time of sale you should have suffered STT. This was the old concept. The new concept in which they have brought this 10% and all that. This is what I was about to discuss. So since that question was raised, I got to take a discussion now to knock off that particular point. So please just understand, these equity shares, units of equity oriented fund, units of business trust. Remember, these items, not only at the time of sale of these items should have suffered STT, when these equity shares and units of equity oriented fund and units of business trust, when they were bought, they should have also suffered STT. Now they have brought that condition. That means those equity shares which suffered STT at the time of purchases and at the time of sale also suffered STT, that income that is generated, capital gain generated up to 1 lakh, that will not be computed for tax at all. There is no exemption section that they have given like 1038. Since 1 lakh is given to them, naturally any amount of income greater than 1 lakh is subjected to the normal rates of taxation. Say for example, if his total income were to be 2,60,000 rupees, or okay, 3,60,000 rupees. In 3,60,000 rupees, which has got, I will put the number, you will be finding it very easy. 3,60,000 total income. In this, long-term capital gain is reported to the extent of 1,60,000, and other income is coming to the extent of 2 lakhs. Okay, please understand, in this 1,60,000, 1 lakh I got to deduct. Now this becomes 60,000. This becomes 2,60,000. Now you find I got to exhaust 2.5 lakhs basic exemption limit. So in this 2 lakhs I will take it up from other income. How much is the unexhausted portion Unexhausted portion is 50,000 because you have basic exemption limit up to 2,50,000. Please do not count this 1 lakh. This is what 112A is telling. So do not take up the remaining 60,000 in wage. 50,000 you take up. The other 10,000 you take up for taxation at the rate of 5%. How much it comes to at the rate of 5%? It comes to 500 rupees. So on this 500 rupees, don't count 87A. When you have got 1 lakh of rupees as not taken for taxation under 112A, you are not expected to claim rebate under 87A once again. So such a concession of this 1 lakh was not given for any other income. That is the reason as why I am telling you 87A rebate is applicable to all items of income. There is no discrimination at all, except in the case of 112A. Then the moment when I tell this way, people will immediately just ask this question, sir, what if the assessee were to have casual income? What is a casual income? So income arising out of puzzle game, winning of lotteries and all that. So there we don't have this 87A at all. So there are few pockets in which 87A will not be applicable at all. So understand that. So we'll just go for good amount of discussion on this on 111A, 112 and 112A. In fact, in the next class when we take up, you will just go for 1 hour extra only for this purpose, because today's class got affected on account of this power problem, because from the morning they were digging our place and trying to find the fault, and that is why at the start of the class itself I told you that we may have some power disruption today. So of course we are very fortunate when we got it. We got them rectified. So now let me finish off tax on capital gains. So are you clear about this 87A? Say, Sunita Venugopal, I just put something not available for me as any problem. So I don't understand what she was just referring about. Kiran Bindu, are you clear about this 87A rebate? So therefore, 87A rebate is applicable to all items of. Yes, okay. Okay. Now I will take up discussion on 100. Have you made note of this one? Now I will make those corrections. Okay. So in this case, there are certain conditions that we have. So please understand those conditions. So units of business trust, today we will be discussing about business trust and all that. Please just don't worry. The rates of taxation is 15%, and in this case, normal rates. What do you mean by normal rate? Normal rate would mean we do not know what sort of assessee for them you are doing this, if it is slab or if it is flat. If it is slab, 0 to 2.5 lakhs, 2.5 lakhs to 5 lakhs, and above 5 lakhs. In this case, 25% or 30% as the case may be, or 40% as the case may be. This is what we consider as a normal rate. So what are the conditions that we have to satisfy? This is coming under section 111A. So certain areas you can't avoid putting the section. It is better that we note down the section reference. So short-term capital, there is tax on short-term capital gain under section 111A. Only these items are applicable, and that 15% rate when you are applying certain, when you are taking it up at a concessional rate, you have to be very careful in applying, because 15% is considered to be a flat rate for any amount of short-term capital gain, for any amount of short-term capital gain, not at the rate of say 0, 5, above 5 lakhs and less than 10 lakhs at 20%, above 10 lakhs 30%, not like that. So please just understand the rates are varying. So here, whatever may be the quantum of short-term capital gain, it is going to be 15%. Is it not concessional? Yes, it is concessional. So now, what are the important conditions associated with that? Condition associated with that is that security transaction tax suffered sales. It should have suffered security transaction tax. Okay. Then basic exemption limit, unexhausted portion you can exempt. What is that? Basic exemption limit, unexhausted portion. So that example I was just referring about. So imagine that you have 2,75,000 rupees as total income, in which you have other income to the extent of 1,90,000. Short-term capital gain, short-term capital gain is there to the extent of 85,000, right? To the extent of 85,000. Now, firstly, we are expected to adjust against this 2,50,000 the other income 1,90,000. How much is unexhausted portion? Unexhausted portion is 60,000. Now, unexhausted portion is exhausted. Exhausted to the extent of 60,000. How much is the remaining balance? 25,000. This 25,000 will be taken for taxation at the rate of 15%. Please understand, that is what we call it out as basic exemption limit will get exhausted for the unexhausted portion. Then, one more important thing, no basic exemption limit applicable for non-residents. Applicable for non-residents. So this sort of basic exemption limit, unexhausted portion, you can take it up only for resident Indians. Sorry, resident individuals, not Indians. Resident individuals. No basic exemption limit is applicable for NR. B. 87A. So just because our friend that just asked this question, 87A is there. So imagine that it is 15% in this particular case. So 15% on 25,000, 3,750. So maximum amount was 12,500. 12,500 or 3,750, whichever is lower, 3,750 is lower. And no tax is with. Are you understanding what I mean? So you don't have the choice. So please just understand, some people would be just asking this question this way, sir, 2,75,000 I take like this. So firstly, I would like to deduct 85,000 and take up 1,90,000 here. So in the unexhausted portion, sorry, they will take it like this one. In 2,50,000, firstly they will deduct towards 85,000 balance. So this sort of reverse doing is not at all accepted. Section 111A talks something about, firstly I want to adjust towards the other portion of the income in basic exemption limit. Only for unexhausted portion you can cover it up is what they are saying. So they have not given you the choice of putting it out, because people might ask this question, sir, why I should apply this 15%? So if I just do the reverse, I can take up 5% rate. But in any case, when it is less than 5 lakhs totally, you can. That is why we say that 87A rebate is present. Are you understanding, all of you? 87A rebate is present in the case of short-term capital gain. Then one more important thing that we should understand is that Chapter 6A deduction is not available. Chapter 6A deduction only for this portion I am talking about. I am not talking about this portion of the short-term capital gain. So please be careful. Always remember, wherever you have concessional rate given, the department will have somewhere something they will deduct. So the example which I have just given to you just now about 112A where 87A rebate is not applicable. So please understand, in India we have lot of impact of reservation we were having. So many times it becomes little tight to tell openly. So sometimes government will do not take it up openly, that debate, because it might result in unrest in the country. Example, today, see, when we consider that there is a bio war, say third world war is what we are experiencing. So world war would mean military bomb, Hiroshima, etc. So something much greater than that had resulted in the form of bio war. So no weapon used, it was only biological weapon they have used. So who is considered to be soldiers for us? So not the CRPF or BSF people. Now you find doctors. So you just find as how fitness is considered to be very great for BSF and CRPF. So the efficiency of the doctor should be given the highest amount of pedestal. So therefore, the doctors who are turned out by these medical colleges should have a lot of merit. So therefore, they have brought this need. So whereas people who are agitating for this need, they are not knowing the impact of that. So we would only consider them that they are ignorant. Okay. So please just understand that. Then some concession is given at the stage of studies. So therefore, he should compete himself in the open category. So therefore, once, say this is only a thought process, what government is having, I'm not talking about the state government or central government, anywhere for that matter. So concession when it is given, only you have to compete. So when a person is coming under reservation category and getting into this sort of wartime scenario, so instead of treating right the patient, he will allow the patient, not only that patient to die, he himself will die. And not only he himself will die, he will ensure that there are many patients who are catching up with that pandemic. So therefore, these are the areas where we should not be giving too many reservation. Likewise, when I have given you 1 lakh of rupees as exemption over and above this 2,50,000, once again coming up for 87A is not allowed at all. So therefore, understand the basic that where 87A will be applicable and where 87A will not be applicable at all. It is very easy to catch up with that. Are you clear about this 111A? Are you clear about this? This is taken up under 111A. Now let us just take up on to long-term capital gains under taxation, because this long-term capital gain under taxation is a little, what should I say, too many items that you have. So long-term capital gain arising out of transfer of equity shares, units of equity-oriented funds, units of business trust, and others category. This others category for which you have section 112. For in this case you have section 112A. Okay, so please just understand the entire long-term capital gain is classified into two. The old provision is continuing to be there under section 112. This one they have brought from assessment year 1920. Arun Jaitley's product it is. So that way I just find they could have made it a little easier. But anyway, it's not that tough and all that. But definitely a good question under examination conditions. So I would like to take up this matter for discussion because in capital gains we will be discussing more about 112A as well as 112, but 112A is the recent one. So therefore, it gives a lot of attraction for the examiner. Are you clear? So now let us just take up where the income is less than or equal to 1 lakh, where the income is greater than 1 lakh. For which type I am talking about 112A type. This we will keep it tomorrow. So we will take up only on to 112A today. If the long-term capital gain were to be from this sector less than or equal to 1 lakh, what is the rate of at all? No tax at all. Then what is the rate of taxation? 10% on long-term capital gain in excess of 1 lakh. In excess of 1 lakh. Correct? Then whether it has got any condition. Yes, we do have conditions. See, whenever there is a concession, definitely there will be conditions associated with that. This I have shared already when 87A was taken up for discussion. So, STT suffering both at the time of acquisition, there is purchases, acquisition is big word, time of purchases and sale. Correct? 2. Basic exemption limit unexhausted for LTCG in excess of 1 lakh. That example I have already given to you. 1,60,000 would be 1 lakh you remove, only 60,000 you can take it up. Three, no basic exemption limit. Say, as far as 111A is concerned, only for sale. Here, what they say, both for at the time of purchases as well as at the time of sale. No basic exemption limit is applicable for NR. Correct? Then, for 87A is not applicable. Is not applicable at all. Because already you got the concession. So this is what they are telling. So the person got concession for education. For employment also concession would mean. So he will not value the position. So he may not give a proper value and importance to that particular job. Anyway, that is a different debate. So please just understand that these are the 4 conditions that you have. 5th one also you have same condition. Chapter 6A, deduction is not applicable. Is not applicable. Then how to compute? How to compute? I'm sorry, one more thing I forgot to tell you. So I hope that all of you would be knowing something about indexation. What is that indexation? Consumer inflation index CII. That is index related to the year of transfer divided by index related to the year in which acquisition was made, multiplied by the cost of acquisition. That is the way we will be arriving at indexed cost of acquisition. So here we have got to make note, no indexation is permitted. So people might ask this question, sir, why this item is not there? Indexation is normally not at all permitted in the case of short-term capital gain arrival. So please just understand, no indexation is permitted in the case. So next one is that how long-term capital gain is computed. How long-term capital gain is computed. So please just understand that we are having three things for comparison. So please just understand, all this discussion is only for the purpose of finding out capital gains, long-term capital gain. So alongside of the theory, I will work out a problem so that it becomes very easy for you to understand. So that when we working, okay. So we have not discussed anything about capital gains. It is all about how taxation is to be taken up under 112A. And 112 we will take it up tomorrow. I mean in capital gains. Tomorrow means the day after tomorrow, class number 2. So now let us just understand how to compute. Computation is equal to full value of consideration minus cost of acquisition. We will be arriving at long-term capital gain. Okay. Now, how cost of acquisition is computed. So please just understand, this regime has come only in the year 1890. So when the first time the budget was presented in the month of February 1st, 2018, so we had this changes made. So therefore, the cutoff date in this particular case is kept as 31st of January 2018. So please just understand, that cost of inflation index for which you have 1 for 2001. 1 for 2001, you have the index as 100, and slowly that index values are going up. So please just understand that I am not talking about 1 for 2001. I am talking about the fair market value on 31st of January 2018. So I will put it like this way. I just taken one example. I am just looking at the example, so that through example I thought I will just communicate to you. So I will show you the theory also. One moment, I am just taking up that theory so that you can also witness as what they just given. I will share that. Our institute text, which is there in page number 103 of capital gains study material, in which question number 4, please read. That question number 4 will give you lot of meaning as how cost is captured. How do we determine the cost of acquisition for assets acquired on or before 31st of January 2018? The cost of acquisition for long-term capital asset acquired on or before 31st of January 2018 will be the actual cost. Correct. This is what normally people would be expecting. Whatever price at which I bought, that should be the cost. However, if the actual cost is less than the fair market value on 31st of January 18, then the fair market value will be deemed to be the cost of acquisition. Quite naturally, whenever you have a cut-off date where you find fair market value when it is greater, that is advantage to the assessee. That is what they are given. Next one, further, if the full value of consideration on transfer is less than the fair market value, then such full value of consideration or the actual cost, whichever is higher, will be deemed to be the cost of acquisition. Here is the catch that you have. So you have to be very careful in reading. I will just allow you to read for 1 minute. Please go through that and let me know. Okay. Come on. Now, this I will put it in my words. Please just understand. Number A, when cost of acquisition is less than fair market value on 31/1/18, then fair market value is cost of acquisition. It's not final. B. Next, when full value of consideration is less than fair market value, then fair market value or cost, whichever is higher will be taken. Whichever is higher shall be taken up. That will be taken up as what? As cost. Okay, I will once again show you the institute material and the cases, whatever they are given, from there we will be in a position to easily understand correlate. Okay, are you clear? Please read. If the actual cost is less than fair market value will be deemed the cost of acquisition. Further, if full value of consideration is less than fair market value, then full value of consideration or actual cost, whichever is higher. Oh, so here I just mentioned F1B, that should be taken up as full value of consideration. Extremely sorry, I'm just making that correction. So when full value of consideration is less than fair market value, so FVC or cost, whichever is higher, is to be taken up as cost. Okay, now let us just take up scenario number 1. I hope that things are clear. An equity share is acquired on 1st of January 2017 at rupees 100 units and its fair market value is 200 and it is sold for 250. Now we are expected to bring out the computation. How is that the computation we have to bring about? I will put it in my terms. That would be easier. So I will create the case. Case number 1, cost is 100 or I will put this in the form of a chart. So please just forget about this. I will prepare it in the form of my chart, my way of doing things. This is cost of acquisition under section 55. 55 is the section which tells about the cost in capital gains. 55 to AC. Okay, I'm not very sure whether it is 2 is there. Section 55. Step number 1, cost. Step number 2, you take up fair market value on 31st of January 18 or full value of consideration on sale. Between the two, whichever is lower, after selecting this, whichever is higher. This is final. Kindly make note. This is 55 AC. Please make note. Please click. You just don't have to refer institute material. So this is the one that I just made note in the next page. Shall I proceed? Now, let us just take up the case. Case 1, cost, fair market value on 31st of January 2018, then full value of consideration, and what is cost of acquisition? What is cost of acquisition? And then what is the capital gain? Okay. Now let us just take up the same number only I am going to take up. 100 as a cost. Fair market value is 200. And the full value of consideration is 250. So now let us just apply. Step number 1, 100. Fair market value or full value of consideration, whichever is lower. Which one is lower? 200 is lower. And between cost and whatever you have taken, whichever is lower, whichever is higher is what we are going to take up. What is your cost of acquisition? Cost of acquisition is 200. Am I right? Then now you have to compare. What is your capital gain? Full value of consideration minus cost of acquisition. There is no indexation. Are you understanding? So, see your RTP as how they have asked a question. It's excellent question I just see. Even objective type is not something about quoting one section number, tick that, and it is not like that. For making that objective type, lot of hard work has gone. So I appreciate the institute and the faculty members who did that. The combination as how they have brought. Correct combination is one, that which is very close by, which are considered to be which are really fake, but it is appearing to be as one of the options. No, that requires a lot of imagination, creativeness, which I found in RTP. Excellent problems, I would say. To take up the first part of the question, first MCQ, that requires this business trust and the background. Person who had not applied his mind on business trust, simply blindly just doing some format, it will not work. That is the reason as why I just felt okay. So this crash course batch is not rushing out solving many problems and finishing it off. It's not like that. I will make you think. I will just give the solid stuff, and one day gap is there. No, I will give you problems. You try and come back. So the time that is provided to you, you have got to deliver. The amount of knowledge what we will be sharing in the classroom will definitely be feeling really elated. The moment you just go back home and go through the questions and go through the sections and study material, you would find everything will be speaking to you. So without the knowledge, when you just read again and again, it will be frustration only. Because I've experienced everything as a student. I really just feel crying. Even I have got examination to prepare. DISA. I have attended to that class in Coimbatore, and I took once examination, that eligibility test 6 marks short. I flunked. They talk, the study material is giving me lot of feeling that everything is lookalike. Which one is right? I am not in a position to select. That means that sort of feeling only students will be having. But anyway, I will not give it up. I will study deep. So when I am taking up this particular class, where is that I will study? So one of our friends told Janvi, I think so, sir, when others are taking rest, you are working out great. So please tell me, not at all working is really bringing you sickness. So some work we have got to do. I'm feeling very happy. Whenever any domestic work is given, I said, no, I'm engaged with class. Even that 1.5 hours time, I did one domestic duty and came. I told my wife and said, since I have not done this duty, power had just gone. The moment I complete, power will come, is what I said. Power came. There was no surprise. She was just telling, all the EB workers have just gone now, the power will come. Because in the night, they will not allow the place to go dark. So coming back to this discussion, so we'll really feel elated. Our capital gain will be 250 minus 200. So the entire discussion is only to find out what is COA, cost of acquisition. How much is that? 50. Then second example, 100, 200, 150. What is cost of acquisition and what is capital gain? Third, all these you have got to update, my dear. So don't hear story from me. Come on, please try. So without forgetting, please subscribe to our channel and please do give feedback. If it is not up to the mark, not good, please just don't hesitate. Please tell me, I will improve. If it is good, please tell others first and later to me. Please update those 2, 3, and 4. So please understand that the entire discussion is to find out cost of acquisition as per section 55 EAC. They are given step number 1 as actual cost, step number 2 is fair market value or full value consideration. So whichever is lower between the two, FMV and FPC, whichever is lower, you take it up. And that is to be compared with the actual cost. That will be compared with the actual cost, whichever is higher, we will be taking it up. And that is only for cost of acquisition. So come on, please let me know what is the answer. Varadarajan Sundar, I am making the point very clear. Why we take cost and all that. I have just given very clearly. Cost is given under section 55 and how cost is determined, for which they have given you the frequently asked question in that institute study material. And those 4 scenarios, what they have given in institute material, I have just copy pasted here. and please just update. Come on, make it fast. So some of our friends have shared in WhatsApp. So let me just find out as whether it is right or wrong. So you have to be very careful. You can also end up with negative figure for long-term capital gain. So you have to be very careful. So in the chat, if it is shared, no, people will try to compare. So cost of acquisition also find out what is your capital gain. So now let us just understand between these two, whichever is lower. Whichever is lower, 150. Whichever is higher between the two, 150. And in this case, it is going to be 0. Are you understanding? Then between the two, whichever is lower, 50. Whichever is higher, 100. And it is going to be 50. So between the two, whichever is lower, 50. And in this case, whichever is higher, 100. This turns out to be 50 negative. 50 negative. Is that clear? So now let me just pick it up one more. Now let me just share with the institute material. So they have just given that. Remember 50, answer for the first one. Then 0, 50, and in this case, capital loss of 50. And they have mentioned that without indexation, you got to do all these matters. You have taken up for discussion. Okay. Are you clear about this? Okay. So today, it was a disturbed class only. So how come I consider it as a disturbed class? So first 30 minutes, I was just talking about the do's and don'ts and all that. You have a doubt session and all that we have discussed, and it got curtailed. So for a moment, I just really felt bad starting of the class. First class itself, it is like that. Then my son and wife, they were telling, no, any good thing which is happening, there will always be some problem will be there, and you have to go up onto that. Then I just told that words really helped me, and I was just looking for when the power would be coming. Completed my domestic work, came back, and I just really felt that it is worth a good discussion. I would say we have 1.5 hours time. Let me just check up. Here is the count today. So it is 2 hours and 18 minutes. So let us just today summarize whatever we have just done. In the next class, when we take up, I will just provide you what is that we are expected to carry out. Okay. See, today we have made a discussion assessment, and we were talking something about different types of assessments. And after talking about different types of assessments, we have talked something about heads of income and rates of taxation and surcharge, cess, and we have found the difference between them. And I will not talk something about marginal relief and all that. So in the next class, we will just take up that. Purely in the next class, we will be talking about very important issues that we will be trying out in capital gains. So now itself, I will just make short beginning there so that we just come prepared for that. Then we have taken up something on incidence and residential status as how that double taxation relief and DTWA will be working on. Then alongside of the taxation, we had a special tax for capital gains. For short term, it is 111A, and for long term, for similar sort of securities, it is 112, which has just come very recently, not 2021. In 1920 itself, it has just come. So we have just debated on that particular issue, and we have developed a chart and solved the problems. And before we could say good night for today's class, we have 10 more minutes before us. I thought we will make a short beginning for capital gains. Okay. See, generally income is considered to be revenue income. Income means revenue. Capital income will not be taken up as an income at all. Capital receipt will not be taken up. But when we find the fortune is very big in capital asset, quite naturally, Indian government had felt that even capital income should also be taken up. Okay. So for capital gain, we expect 5 important components. 5 important components. So I thought business trust will take up. Business trust tomorrow, there is in the next class, we will have a little extra time. So towards the end, I will have to take up that business trust, because the matter related to business trust is very, very important for capital gains. Today it is not possible to try. Now let us just take up on to capital gains introduction. So starts from section 45 and it goes up to section 55. Because from 56 onwards, we get income from other sources. What are the very important points to take up under capital gains is that first thing is that you should identify the capital asset. Second important thing is that there should be a transfer taken place during the current period. Okay. And this should have resulted in capital gain. The next item, it should have resulted in the previous year. And for arriving at the taxable capital gains, we have got to know something about the exemptions. So what are the 5 important things that you expect to have under capital gains? Firstly, it should be a capital asset. Then there should be a transfer. Then capital gain computation they are talking about. It should have occurred, I mean the capital gain or the transfer should have occurred in the previous year to be captured in this particular head. And after deducting all the exemptions, the balancing figure is taxable capital gain. What do you mean capital asset? So first and foremost thing is that when you test a particular income coming under capital gains, whether it is to be taken for taxation or not, the first test is whether it is a capital asset or not. So if you find in the test, if you prove that it is not a capital asset, the rest of the question will not be asked at all. So therefore, even as a professional, when you are taking up a case, first and foremost thing you have got to check up is it a capital asset? Then we need to know really the meaning of what is a capital asset. What is a capital asset? Capital asset is a property of any kind, whether related to business or not, except the following. Say some foreign investor, institutional investors and all that they are talking about. So that we will take it up later. So the general points only I would like to touch upon. Property of any kind, whether it is a tangible, intangible, whether it is mobile, immobile, we are not really worried about. Property of any kind. Property of any kind, whether used for business or not. Even if it is personal also, you are going to take it. Except the following. What is that following? Stock in trade. Why stock in trade is exempted? Gain arising out of sale of stock in trade will come under another head. Correct? Then agricultural land. There they have mentioned rural agricultural land is what they say. What is that? Rural agricultural land. Then do we have urban agricultural land then? So agricultural land which are in the vicinity of urban area or urban agricultural land. because the value of that land is likely to be more. So therefore, chances of making money is great. Therefore, they want to satisfy agriculturists. Same time, they want to capture income. So therefore, they have carefully taken out urban agricultural land. So therefore, rural agricultural land they have taken out as exception. So urban agricultural land they have included as part of capitalism. What do you understand from close vicinity? 2 kilometers in one case, 6 kilometers in another case, and another 8 kilometers. That all depends on the population of a particular location and the distance. We'll go into that aspect a little later. I mean, in the next class. Then third important thing is personal effects. What do you mean by personal effects? That which is used in their day-to-day life. I have a mobile, I sell it. I have a car, not used for business, I sell it. I have a scooter, I sell it. So there you have some profit. So the department should not be catching on too small an item, and therefore they said, okay, these personal effects are also to be excluded. So people might just cheat. No, what they do is that they put some diamond, gold in their shirt, and say that it is personal effect. So you cannot be just doing. So there they have just brought an exception to exception. So exception to exception will automatically become part of capitalism. So they just given a list: jewelry, shares. I'm sorry. Jewelry, art, archaeological items, drawings, paintings, etc. Because shares will come under property of any kind. Okay, coming back to this, these items are forming part of exception to exception, they will automatically become capitalism. Then some gold bond, then 3-4 bonds that they issued long time back. What is a gold bond? Instead of investing in gold, we have subscribed to gold bonds. So those gold bonds are not taken for taxation. So bearer bond, some 3-4 bonds that they do. So these are the 4 items if you exclude, the rest of which will be taken up as capitalism. Okay. So the other matter that we want to take up is the next stage for our discussion is transfer. So what is a transfer? So transfer has got a big list once again. So people used to find it difficult to remember all these points. And in a particular case, you have got to tell whether it is a selling or whether it is an exchange, whether it is a relinquishment, extinguishment. So for that, I just produced one, or I just developed just a sort of a short form of remembering all that in the same order. So generally, I ask students coming for face-to-face class whether you had breakfast, lunch, and all that. Reason is that when person is not having food, coming to the class, many times I've just seen them taking water in the early morning itself. That means their appetite level is very high because of the class they will be feeling. So whatever important that you discuss, these people will be thinking when is that class will get over. So their concern is about class getting over, whereas my concern is that whether they have understood the matter or not. I made the point very clear. Please come to the class only with some food. This is what I say. Small energy can convert minimum performance into maximum. Okay. Small energy can convert minimum performance into maximum. I have not come prepared for this transfer. Small stands for sell, exchange, and relinquishment. Small energy is extinguishment. So remember, small energy can, CAN can. CA stands for compulsory acquisition. Small energy can convert. What do you mean by convert? So convert capital asset into stock entry. Small energy can convert minimum performance, maturity of zero coupon bond. So small energy can convert minimum performance. What do you mean by performance? There are some part performance that you have. What do you mean by part performance? I would have given the money consideration and I took possession, but registration not there. This is to be considered as part performance. So small energy can convert minimum performance into maximum. What is that maximum stands for? In certain places in India, it is not the flat that they transfer the membership of the housing society. In Bombay and Pune, you find transfer of flat instead of doing it that they will transfer the membership of housing society. So even that symbolic transfer also will be taken up as a transfer of the capital asset. So therefore, if any of the transaction is not falling under transfer, then the rest of the matter regarding capital gain you don't have to compute at all. So please just understand, stage by stage you are expected to filter the transaction. Firstly, whether it is a capital asset, to take up as whether it is a transfer, find out as how capital gains will be taken up, and previous year an exemption. So all these matters that we will be taking up in the next class. I would like you people to come prepared for what is a capital asset, what is a transfer, and how to compute the capital gain, previous year and exemption. Before I could just say, we are just losing, I wanted to take up matter for discussion this way. So, certain transactions, what is considered as transfer in other laws, other statutes. In income tax, you say it is not a transfer at all. What is not considered as a transfer in other statutes, in income tax, you say it is a transfer. So, you would have certain amount of fight, I mean, transactions or transfer in Income Tax Act, transfer in other act, not a transfer in other acts. Then, not a transfer in Income Tax Act will be a transfer in other act. Then, not a transfer in other acts. So, there is no problem for these two. Why? Transfer as per Income Tax Act is also transfer as per other acts. No dispute at all. So I am agreeing at a point, opponent is also agreeing at a point, there is no dispute at all. So not a transfer in other act, but it is a transfer in Income Tax Act. What is it? Conversion of capital asset into stock in trade. It is a matter only in Income Tax Act. It is not a transfer at all in other act. There is no statute in this world could say that it is a transfer, but in income tax you say it is a transfer. Understood? Then there is one important thing. I will tell you what is the significance of these two. Not a transfer in Income Tax Act, but transfer in other acts. This is what I consider as very, very, very important. Which one? This combination. So this combination is given in section 47. You have got to be very careful. What is that? It is a transfer in other act, not a transfer in Income Tax Act. In Income Tax Act. What is that? Partition in HUF. Partition in HUF is a transfer in Transfer of Property Act. Whereas in Income Tax Act, we are seeing transfer, there is complete transfer, total partition of HUF property. There is in other act, they say it is a transfer. So in Income Tax Act, they are telling it very clearly that this transfer is not a, this transaction is not a transfer at all. They have just given a big list, some 27, 28 items they have given. So therefore, you have got to be very careful here when you say when a particular transfer in other act, if it is identified in section 47 as not a transfer, then there will be no capital gain at all. So therefore, what you people need to know, firstly I should know clearly what is capital asset, then I should know whether it is a transfer. So in the minds of others, if it could be a transfer, but when it is falling under section 47, you just say it will not be taken for taxation at all. It will not be taken for taxation at all. So then there is one more problem that we have. What is that one more challenge that we have in the case of this section 47? So imagine that HUF are transferred or through complete partition one land to many co-parceners there. To many co-parceners there. To many co-parceners there. So these co-parceners, the property which is conveyed to co-parceners will not be a transfer. But one of the co-parceners, say Karta, he is selling that particular property to an outsider. So we all know that in order to compute long-term capital gain, we require cost of acquisition. The Karta who took the property from HUF had not paid any money. It is only the HUF which bought the property. Then there is one section will enable you to find out what is the cost of that particular asset which came under section 47. That is given in section 49. So whenever you are reading section 47, please read along with that section 49 also. What is the cost for that particular asset which was not considered as a transfer in the previous occasion? When that particular asset is subsequently sold, what cost we should assign for that particular item? Because the new owner had not bought the property. It was taken from the earlier owner, and as a what I would say, a process of law where this gentleman is having the asset, what is the cost associated with that asset will be the question. So what is the cost associated for that section 49 saying the cost to the previous owner is the cost of the new owner. So in order to find out as whether it is long-term capital asset or short-term capital asset, the holding period of the previous owner should also be counted. So all these stuffs that we have just given in section 47 and 49, especially for not a transfer and for the purpose of finding out cost. These are the two areas which I would like you people to come prepared, so that the next class when we take up capital gains, it would be very, very easy and it will be helpful. So in the next class, we will be taking up onto capital gains, very important areas. So maybe one day the gap is there, I will definitely be communicating to you. And at this moment, we will be just closing it. And before that, let us just take up something about discussion that we have made. We have just started introducing about capital gains, and the discussion is going to be very, very interesting. There will be one problem at least in capital gains. Don't miss that. Okay. So in the next class, when we meet the day after tomorrow by 2 o'clock, hope that there is no power shutdown at that point in time. Even if it were to be there, we will definitely be working out, and no backlog will be having. So we'll just take up on back-to-back basis, and don't forget to subscribe for our channel. So we require a lot of people to like. Okay, thank you. In case the class is to be improved, you can tell the improvement to me, and in the class is good also, you can communicate to me. And more interested, I will be more interested if you communicate to others. Okay. So there is in the starting point we had some 70 people attended. So later on after the break we were not communicated, it seems. And please just understand, whenever you want to revisit the same class after later at some point of time, so it will be available, and we can enjoy the class. Okay. And this is what I have today. And before I could just close, happy Tamil New Year. Today we are having that. So tomorrow at Kerala they are just celebrating for happy Vishu. So let me just wish you all of you the very best, and you can spread the message about this class. Ask your friends to send the request by putting their name, initial, location, and email ID. Okay. Thank you. Good night.